In this video, I'm going to share with you guys a boom and crash strategy to use to never ever go broke again. This strategy, I use it mainly to scalp the market, taking advantage of small price movement and to always win in this type of market on the crash 500 index and also on the boom market as well. I'm going to show you guys how you can do this the opposite way on the boom market and also make profit as well. Now, how do I always make profits on this type of market? Is that I always observe this market carefully. Now, if you take a look at this point right here on the market, you can see that the market is highly volatile at this point right here. So during this point in time, you do not want to enter into the market. From this point here, if the market has gotten over this point right here, you do not want to place a buy from this point. If the market have bought over this region, what you want to look for is a sell opportunity. Okay, you want to look for a sell entry point to catch the spikes, because when the market passes this region, there's a higher chance that the market will always retest because it's at the overbought. Now please remember that this is the 1 minute time frame. So if you go over to the 1 hour time frame right now, you can see that it is not the same on the 1 hour time frame. But you know that it's the 1 hour time frame that controls the 1 minute time frame. On the 1 minute time frame, the market has gotten to the overbought. But on the 1 hour time frame, the market is at the oversold. But if you zoom in a little bit, you can see that this market have bought for a very long period of time. Let's say it took almost 3 hours right now for this market to bought up to this point in time, 3 to 4 hours, or even longer than that, right? But what you should observe, like I said, the market is highly volatile. You see that the market just dropped down. If you go to the 1 minute time frame right here, you can see that the market have dropped down significantly below this point that I marked. So let's go back to the 1 hour time frame. On the 1 hour time frame, hope I'm not going too fast. On the 1 hour time frame, what you first of all observe is how long the market have bought. How long the market have bought will also determine how long the market will sell. All right, take a look. The market sold up to this region. So it bought here, it sold, it bought here, then it started to sell. So now this market will sell again before it will start going upwards for a buy. All right, if we go back to the 1 minute time frame right here, you can see that although the market have started to buy on the 1 minute time frame, this is because the market moves quickly. So now the market have started to buy here, but you don't want to place a buy at this point in time. The market at this point is extremely, volatile and is risky if you place a buy. Take a look. The market just dropped again for a sell. So it's risky for you to place a buy because the market have bought for a very long period of time. So you can see that the market have bought for a very long period of time. It need to sell again for a very long period of time before you can enter into this market. So at this point in time, the place that you want to look for a possible buy entry is towards this direction here. That is where you want to look for a buy opportunity. I've not added any indicators in the chart. I'm just sharing with you guys the technical analysis aspect of this trading so that you can understand. During this section here, that is where you want to look for a possible buy opportunity to place that entry. All right. Now, if we go over to the 1 hour time frame right here, you can see that there's still a little bit of time for this market to sell. So the market should sell towards this region right here, towards this point before it will start to go upwards. And at that point whereby the market has started to go upwards for a buy, that is where you want to look for a possible buy opportunity. So the buy opportunity you want to look for on the 1 minute time frame is when the 1 hour time frame has started to go upwards. This means that after the 1 hour time frame have sold for a certain amount of time, that you are not confident that you want to place a buy, because you see that if the 1 hour time frame have sold up to this point and they have started to retest, that's a good opportunity for you to place your buy on the 1 minute time frame. Then you scalp the market. You can take 10 candlesticks from that point in time. All right, then if you zoom out, if you are in the market during this position on the 1 minute time frame, and you saw that on the 1 hour time frame, the market have not sell but is buying, know that that market will drop. I hope you understand what I'm saying. Please let me explain this so that you can understand. If you are on the 1 minute time frame and the market is at the overbought, what you should do before you confirm your entry is to go over to the 1 hour time frame. Then when you go over to the 1 hour time frame, you observe. If the market have bought but it have not sold, you should place a sell immediately, because that market would sell. Because if you take a look at the historical trend right here, the market bought, it sold, it bought, it sold, it will still sell again, because it needs to remain, the market needs to sell to a certain point that it might want to be in the same position of this buy entry position. So how do I know that this market will sell again? This is whereby I put in the relative strength index, the RSI on period 14, levels 90 and level of 10, the style on 4 pixels. You apply to close, the style right here on 1 pixel color white. You click on done. Then I'm going to put on the MACD indicator on period 14, slow, EMA on 24, MACD SMA on the level of 10. You apply to close, the main color black. I put the pixels on 4 pixels, signal color red on 4 pixels. Then you click on done. All right, now take a look at this point here. You can see that when price gets to the level of 10 at this point in time, take a look, trace it with me, guys. Level of 10, the market bought, the market sold, sorry. Okay, look, trace it here. Level of 10, the market sold. At this point as well, the market will still sell. So take a look at this point right here. The market have sell, and there's an opportunity that the market will sell again before it will start to retest. And if you take a look at this point, it is the downtrend of the MACD just started. And during the downtrend of the MACD, we're expecting a lot of spikes on the market, just as it did here. Towards the downtrend of the MACD, there's a lot of spikes. Take a look. A lot of sell entries. Now, if you scroll towards this ending point right here, you can see that here as well, a lot of sell entry, the downtrend of the MACD. So we're expecting another spike here, because there's that point is still a downward trend of the MACD. So we're expecting that this spike should come towards this position before the MACD will retrace upwards for a buy. All right, so this is how you can always make profit on this market, and you will never ever go broke again when you are trading this boom and crash indices. You will never go broke if you follow this type of strategy and analysis. Although there might be some losses on the trade, but with proper analysis, using the right indicators and strategy, you will be able to make profit all the time in this type of trading. All right, now we'll go over to the bull market. And remember that on the crash market, what I said earlier was that you need to observe this market carefully. All right, you need to observe this market carefully before you are able to use to trade perfectly. Now, looking at this chart alone, what I'm seeing right here is that this market is this market is already at the overbought level. So now this market should go towards the downward trend, meaning that this market should sell. All right, I'm looking for a sell right now, but now if I zoom in a little bit, I can see that this market have sold for a particular period of time, and for me, it's not a good idea for me to place a sell. All right, it's not a good idea for me to place a sell, and it's not a good idea for me to also place a buy. Now, the reason I'm not going to place a buy is because this market have been buying for a very long period of time. All right, the market have been buying for a very long period of time, and it's now time for this market to sell. But because this market have sold up to this point, if I place a sell, there's a chance that this market will buy. Okay, there's a chance, although it's not likely to happen, but there's a chance. So this is the mentality and how you should think all the time whenever you're trading this market, so that you do not end up losing your trade. Now what I'll do right now is to go over to the 1 hour time frame, and also I'm going to clear off all the objects right here. Now on the 1 hour time frame, you can see that this market have gotten to the overbought already. Now we're looking for a huge sell entry point. All right, we're looking for a huge sell, meaning that this market would sell. But we know that on the boom and crash market, this market buys, it sells. It buys, it sells. The market is only favorable, mostly favorable to those that have bigger accounts. Mostly those that have like $1,000 account, $2,000 account, $3,000 account. Those are the people that enjoys this market. Those are the people that trade this market, and they are able to hold on to this market for a very long period of time. And when they are able to hold this market, they are able to make profits from this market because of that they are big accounts. Because no matter how many losses they have, they will eventually make up back those losses because of their big account. Their account can sustain those losses. I hope you understand what I'm saying. Because they have big account, they will be able to hold on to this market for a very long period of time, until the point whereby the market starts to go on their favor. But because you have a smaller account, it doesn't work that way. All right, it doesn't work that way. Now I just saw something that happened here. Let's go over to the 1 minute time frame. All right, well, on the 1 minute time frame, okay, the market have not bought. Now on the 1 hour time frame, if we take a little bit zoom into the market, we can see that this market have bought for a very long period of time. So it's now time for this market to retest. If you take a look at this point right here, let me zoom in a little bit. This point shows that this market have started to sell already. It bought up to this point and retested. So it will now start to retest towards the downward trend position. All right, it will start to retest towards this downward position. Now we're going to look for a possible sell entry, but before we look for a sell, we do not want to place a sell right now, because if I place a sell, there's a chance that the market will buy. So I'm going to wait until the spike comes into the market. Again, a spike should come into the market before you should place your sell. The reason is that this market have sell for too long. Okay, although the market might continue to sell before the spike comes in, but to be on the safer side, you want to wait until the spike comes in before you place your sell entry. Then you scalp the market. You do not place a sell, you do not place a buy. It's not a good opportunity for you to place a buy, but it's a good opportunity for you to place a sell after the spike have come into the market. So I hope you understand what I've said to you, and I believe with this strategy, you'll be able to trade boom and crash indices and never ever to go broke again when trading the boom and crash indices. If you found value in this video, do well to like and subscribe. I'll see you guys on the next video.